Uh, Welcome to another edition of performance management. In today's class, we shall continue with our decision making. In today's class, we'll be looking at make or buy decision. Now, when you see a question on make or buy decision, it simply means that you have an option either to produce that material or that goods in-house, or you get it outside. Now, you want to make a decision. Pere want to produce, Pere want to produce 50,000 units of 50,000 units. And Pere is now considering that should I make it internally? Should I make it internally, or I actually buy it outside? That is the decision. You are making a decision. Here we now look at our costs of producing that 10,000 units. If the cost used in producing that 10,000 units is actually higher than what you will buy it outside, here we now make the decision that instead of buying this, instead of making this internally, I can purchase it outside. The cost of making it internally will be 100,000. The cost of buying it outside from a contractor may be 50,000 naira. You see, Pere will now make a decision that instead of making it internally, why can't I buy it from an external purchaser, or from a subcontractor, or from a contractor, that I'll just pay the subcontractor 50,000, then I will have a savings of what? 50,000 naira. And that is make or buy decision. Either you produce the product internally, or you go outside and get it. Now, what will you use to determine that it is your cost or it is the profit? It depends. Sometimes it may be profit, sometimes it may be what? The cost. Class, do we get that explanation on make or buy? Do we get that before we go into the calculation? Hello, I'm asking question, please.
Yes, sir.
Yes, sir.
Okay, that's fine. If that is established, I think we just need to Bridget.
Hello, sir. Good afternoon, sir.
Yeah, me too. Good afternoon.
Please, can you explain that again?
Okay.
Thank you, sir.
Hello,
The
sir.
make or buy decision. Yeah, I'm with you. Hello.
Hello.
Hello,
Hello.
go ahead. Yeah, hello, go ahead.
Yeah, please, I want to ask, what is the topic like? The topic we are treating.
Are you just joining us for the first time? Is this the first time of joining us? Bolanle Ibrahim. Hello, Bolanle.
Yes, I
The
said, what
topic,
is the topic? This make or buy
is
is under
this
which topic?
okay? Okay, but are you just joining us for the first time? Okay, the make or buy
Yes.
decision. Okay, that's why I see. I see. For those who have been following us, this is decision making. We started with limiting factor. From limiting factor, we move to decision making. Limiting factor is also a decision making topic. Under the decision making, we talk about relevant costing. We move from relevant costing to accept or reject. Accept or reject is under the short-term decision. If you have the material, it is well stated in the material, of which I will advise you to get it immediately after this class. So make or buy decision is a short-term decision. Is under short-term. You are making a decision. Either you make the product internally or you buy it externally. For instance, while you make it internally in-house, you want to produce 10,000 units, and the cost you will incur in producing that 10,000 units may be 100,000 naira. Then you involve a contractor outside that, please help me to produce this product. Probably the product is not, because you should not outsource your key products, right? You should not take it out. You cannot take it out to people. Probably the product is not, let me say, it is not part of the key product. You can decide that, okay, if that would be the case, let me, subcontractor or contractor A, let me engage them. And then this contractor is now saying that, oh, this will cost you 50,000 naira. Then for you to make that product internally, it will cost you 100,000 naira. And for you to get it outside, for people who will do it for you, who will manufacture it for you, or who will supply it for you, they will say, oh, bring 50,000 naira. Now, you can see now, you have the decision to make. You have the decision of saying that you want to make it internally, or you say you want to get it outside. Now, what is the decision here? You go for the lowest cost. You look at it that, oh, if I should make it, I will spend 100,000. If I should buy it externally, I will incur 50,000 naira. So why can't I buy it external? Why can't I buy it from an external supplier? Then I will now save 50,000 naira as my what? As my savings. And that is either you make it internally or you buy it. That is what we call make or buy decision under the short-term decision. Bridget, did you get that? Bolanle, did you get that?
Yes, sir. Thank you very much, sir.
You're
Yes,
welcome.
thank you.
Okay. Now, if that is well established, we will look for, we will quickly see, solve an illustration to that. Please, class, understand these things. When you see a make or buy decision, the question will tell you that, oh, calculate either AA Limited should buy or sell these products. Either you buy, to buy or make these products, sorry. The question will say, oh, will this so company buy or make these products? Which one did you want? Which is the best decision? Of which, when you want to make the decision, you can either make it on the costs or on the profit, which means that you may be given the selling price, the cost, the associated cost of that product, then the sales minus what? The variable cost will give you your contribution minus your fixed cost will give you your profit. Then you will now look at it outsider. How much are they willing to pay? Right? Mostly make or buy decision will be based on cost. I don't want to go there. I think mostly it will be based on cost, because you want to produce this goods internally in-house, and you want to make it outside. Now you are making a decision. Which one of these will it save you costs? You are looking for the product, you are looking for a way to reduce costs, right? It's just like when you want to produce, when you want to an in-house software, for instance. If you are to build the software in-house, it will cost you maybe 50,000 naira. Then if you are to engage an external person to build up the developer to do what? To build up a software, it could cost you more. It may cost them about 100,000. Now, which one of these is the best decision? Is for you to look at it internally and do what? In-house, and do what? And manufacture the what? The product, right? And that is what we call what? Make or buy decision. You will see it in the question. It will be clearly stated from the red card that this is what they say you should do. Class, let's quickly look at, if you have the material, excuse me. If you have the material, please quickly check illustration 5, where we have make or buy decision. Now, this is an illustration 5. Excuse me. A company makes 4 components. Please confirm if you can see my screen. Confirm, even if you have the material, confirm if you can see my screen. Please confirm. Can you see my screen?
Yes, you can see it.
Okay,
Yes,
that's fine.
can see your
Okay,
screen.
that's fine. Now,
Yes,
a,
you can
a
see your screen. I
company,
can see you.
okay, that's fine. A company makes, I didn't ask if you can see me. Oh. I know it's produced. Now,
I
a
can see you.
company,
I can see you.
See. Now, a company makes 4 components: bag, derby, dib, and wig, for which costs in the forthcoming year are expected to be as follows. A company makes 4 components: bag, gap, dip, and wig, right? For which cost in the forthcoming year are expected to be as follows. Now, the 4 of the product unit is given. The unit marginal cost. What is unit marginal cost, class? What is unit marginal cost, class? What is unit marginal cost? Hello? Hello, what is unit marginal cost? Away. No answer. Okay.
Additional unit.
Okay, that is
Additional unit on additional cost on unit.
additional units. That is your variable cost, right? Your unit marginal cost is your variable cost, right? That is the marginal cost, an additional unit, right? Now, you have the direct material. You can see that direct materials was given in dollar. That's 4 is 4 naira per unit, because the total value of the direct material cannot be given as 4, while the production unit is 1,000. Do we get that? So these are the things you should look at when you see a question under the make or buy, or when you see PM question, right? Try as much as possible to settle down and analyze the question. Don't just rush, because the way you rush in, you rush out as well, right? Read the required. Don't forget our principle. What is the principle? You read the required to understand what they say we should do. That is first. Second, it is assumed, once you read the required, you understand the required, it is assumed that you have solved more than 50% of the question, because you already understand that, oh, this is how you need to solve it, right? Now, you have the marginal cost, the direct material, the direct labor, the variable production overhead. These are dollar rates. These are dollar rate per unit, $2 per unit, right? And they want to produce 1,000 units for the first one, 2,000 for the first, second one, third one, and 3,000. Don't forget the way we normally do the total cost. They give you direct materials of 4 naira per unit. You can see that it will goes with units class. It will goes with unit produce class, unit produce, because you will use that material in the what? In the production. Direct labor, you will also use what? Labor, who will work directly in the what? In the production. They give you 8 naira per unit. It's a unit cost. 8 naira per unit, 8 naira per unit, right? Please take note of all these things, right? We've been doing that in our previous what? In our previous lecture. Now, direct attributable fixed costs per annum are committed fixed costs. Now, you can see that we're given, okay, let me scroll down. The direct, I'm supposed to read the required. I've actually break the rule. I'm supposed to read the required of this question, but it's fine. Direct attributable fixed costs per annum and committed fixed costs are, you can see the attributable fixed costs. Of course, when you want to produce a product, when you want to produce the cost now, this is a spray, right? If this spray costs 50,000 naira, right? This cost of producing this spray will include the variable cost as well as the fixed cost. Of course, you will need labor to produce this. Of course, you will need a warehouse to keep the raw materials. The total cost of this will be the total cost of using producing the spray, right? So definitely all these costs are also important because they join the cost incurred in producing this. Now, if that is established, you have incurred as direct consequence of making $1,000 incurred as direct. So they incurred all these expenses directly in the process of making it. This does not talk about relevant cost or not, because they are talking about making a product. And when you want to make a product, is total cost class. When you want to make a product, is what? Total cost. Another fixed cost, committed cost that they've actually incurred before now. They've already committed it that they will do that, right? Like salary and all that. Now, directly attributable fixed costs are all items of cash expenditure. Directly attributable fixed costs are all items of cash expenditure incurred as a direct consequence of making the product in-house. So these are the costs incurred, both from the direct material, direct labor, variable overhead, the direct attributable fixed costs, as well as the committed costs. Committed fixed costs are all the costs incurred in-house in the process of producing that what? Product, right? Now, there is a subcontractor now. A subcontractor has offered to supply units of baggy, gabi, the 4 products, right? 12 naira per unit, 21 naira per unit, 10 naira per unit, and what? 14 naira per unit, respectively. 13 naira per, not naira, $13 what? $14 per unit, respectively. Now, the question now is that should the company make or buy the component? And that is how the question will come. Should we make or we buy internally? Now, you need to consider the total cost you will incur internally. Then you will now compare it with the external cost, which is the subcontractor. So the difference now, you will now use the difference to make decision. Either you make or you do what? You buy. Class, do we understand the explanation on this before we start? Do we get it? Hello?
Yes, sir.
Yes, sir.
Okay. Now, if this is established, thank you. Now, if this is established, now let's quickly go to let's check the suggested solution. Now, suggested solution, decision making. Suggested solution. Suggested solution. We don't know the name of the company. Please, if there is name of the company there, please always put it just like our presentation, right? The way we normally do our presentation is what is very important, right? So, make or buy decision. You can put it as determination of make or buy. Let's just put it make or definition of make or buy components. Please, if you have the name of the organization, please always put it first. And presentation, please, with presentation, present your works very well, please. Just like the way we've been doing it, is very important. Plus, is what is very important. So we will start with the cost of the supplier. You can see the cost of the supplier. The supplier is willing to offer 12 naira $12 per unit, $21 per unit, $10 per unit, and $14 what? $14 per unit. So therefore, we can have supplier so we need to have how many material? Bag, gag, clip, and wig. Okay, so I always like due process. Let me just put naira sign. Place your naira sign. This small marks. This will give you like one mark, and add 1 mark to 14.
Sir, it's dollar that is there. Oh.
Oh, thank you. Thank you so much for that. Okay, so this is 1 mark. Imagine you add 1 mark to 49. What do you have? You have 50. So all these are very important. Imagine you have 4 marks here. 4 marks plus 46. Now, so supplier is willing to offer this. Don't forget that this is the total cost, because unit cost cannot be like this, because they say a committed fixed cost. This is the cost, not a unit cost. This is the total cost indirectly for the directly attributable to fixed cost. Why all these ones, this is per unit, right? $4 per unit. So now, we need to show our workings. Okay, let's start from the suppliers. The supplier. So we will need to multiply this by the numbers of units so that we will get the total cost. So we can do our workings outside here. No, we always do our workings outside, right? Workings. So we can have this, right? So, okay. So in this case now, so we multiply it by the units so that we will get the cost, that we'll get the total cost that the supplier is willing to do what? To supply. So equals to, this is $12. The first one is $12 per unit, class $12 per unit, times, what is the unit produced for bag? What is the unit produced? You have the material. Give me the unit produced.
1,000 units.
Thank you. 1,000 units. 1,000 units. So what do we have here? What do we have here?
$12,000 per unit.
Which
$12,000.
dollar per reduce $12,000, right? The next is what? Please, if you don't have the material immediately after this class, please send your proof of payment so that you can get your material. So 21 naira per dollar per $21 per unit times what is the unit produced?
2,000 units.
2,000 units. 2,000 units.
That's
So what do we have here?
42,000 units.
22
That's
$42,000.
$42,000 per unit.
Not per unit.
$42,000, not per
$42,000.
unit. Hello, not per unit. You've already used unit $21 per unit. Abi, should I use naira? Ha. $21
No,
per unit
no.
times 2,000
Times.
units. Okay. So the next, what do you have? The next is $10 per unit times what is the unit produced?
4,000 units.
4,000 units.
That's $40,000.
$40,000. So the last one is how many units? Sorry.
That's 14 per unit.
Okay.
$14 per unit.
Okay, $14 per unit.
Yes.
Okay. $14 per unit times what is the unit produced?
3,000 units.
3,000 units. And this is what?
That's $42,000.
$42,000. So this is supplier cost. Okay. So we'll now compare it with the in-house costs, right? We'll compare the supplier's cost with the in-house cost. Clementina.
Yes, sir. I don't know where you people are getting the 12, 21, 10, and 14. Sir.
But were you in this class?
In this class from the beginning.
You were in this class, but you heard when I said subcontractor is willing to supply unit of this, and this will be the cost per unit. This is it. This is where I got it from. Can you see it? This is what the supplier is willing to supply. So we'll compare the cost of the supplier and the cost of making it in-house. So we'll look at it. Which of the costs is preferable? Which one should I make it internally, or I do what? I get it externally. That is make or buy. So class, with Clementina, do you get that now?
Yes, sir.
But please tell that uncle that he should stop sending you tests while you are in class.
What did you send me this to?
You get okay, so now if possible you can go on break for 4 months. So now so so for bag, for supplier you have 12,000, right? 12,000. Okay, let me $12,000. This you have what? $42,000. So with any question you see under decision, you have to present it this way. The cost that they are willing to, that the external supplier is willing to supply that material, that product first. Then you now compare it with what you have internally. Then you use it to make your decision, right? So if this is well established, so we need to go by the one of the internally, right? Then we will now compare. I think I need to put $1 sign here. No, up. So that I can establish, I can compare with okay. Let me put it this way. In-house cost. Okay, so the in-house costs. So we check one after the other. Plus, we check after the other. So we'll start from the direct material. Now, this is the marginal cost. Look up. Can you see this is $4 per unit, and they want to produce 1,000 units. So it will be $4 per unit times 1,000 units. We give you the cost of direct what? We will give you the cost used in producing a bag. Plus, we give you the cost used in producing bag. Please, the person should mute his or her mic, please. We are not talking, please mute your mic. Thank you. So if this is in-house cost, we start with direct material. So we do our workings outside because we don't have enough space here. Right? We don't do what? We don't have enough what? Space. So direct material costs. Direct material costs. Because it is per unit, so we need to get the total cost. Right? Please make sure your work is neat. Examiner will also look at that. That is why it is advisable do your workings outside, right? You do your workings outside, then you take the figure to your suggested solution, please. So we erase all this. Class, what is the direct material cost per unit for bag?
$1,000 per unit.
Okay.
$4 per unit.
$4 per unit. So in case you don't know where they pick it from, you better talk per unit. This is equals to
$4,000.
$4,000. So what is the cost per unit for gap?
$5 per unit.
$5 per unit. $5 per unit. Times, what is the unit produced?
2,000 units.
2,000 units. So what do you have?
10,000.
$10,000.
10,000 units.
Mm.
$10,000, right?
Yes.
Yep.
So next.
$2 per unit.
So what is the? I'm coming. This is next cost is what?
$2 per unit.
$2 per unit. So this may actually waste your time, but guess what? It will give you more mark. right? To give you more mark. So what is the unit?
4,000 units.
4,000 units. So this is what?
8,000 units.
8,000.
$8,000. I know we are not used to dollar, but for the purpose of this class, used to it. So what do we have? What is the unit cost?
$4 per unit.
$1.
$4.
Okay, 4. You can see times what? Unit for this. What is the unit?
3,000 units.
So what do we have?
That's $12,000.
$12,000. So this may waste your time, but guess what? To give you more mark. So after direct material costs, which other costs
Direct labor.
as a marginal cost? Okay, direct labor. Okay. Direct labor. So direct labor costs, right? So what is the cost per unit?
$8.
$8. What do you have? This is 8,000. Next, what do you have? What is the cost per unit?
$9.
$9. So this will give us what?
That will give us 18. 9 times 2, 18.
18. This is what?
$4 per unit.
$4 per unit. This will give us what?
That's for 16.
This will give us what is it? What is the cost?
$6 per unit.
So this will give us what?
That's 18.
Okay. After that, which other cost do we have as marginal cost, as variable cost?
Production overhead.
Okay. Production overhead costs. Guess what? This will waste your time, right? May waste your time. The production overhead or variable production overhead. What did they say? Is it variable
Variable
production
production
overhead?
overhead.
Production cost. So what is the cost of the material for variable per unit?
$2 per unit.
$2 per unit. So this will give 2,000.
$3
This will
per
give what?
unit.
This is 3. This is 6. So what is the cost of this?
$1 per unit.
Next,
$2 per unit.
okay. So we are done with the cost, right? All you can see we are done with the what? With the cost. Don't forget that all this one, they've given us the total cost already. So there is no need to multiply by anything. It is only when they give you the unit cost before you can multiply by the unit produced, right? Unit cost of that. Okay. So if this is well established, so please screenshot this part so that you can give me figure will not be scrolling up and down, right? Just screenshot this. Excuse me.
Contact, sir, let's
So I
screenshot
can,
it.
okay. So we go there. We can arrange it this way. Marginal costs. Right? Marginal what? marginal costs. Okay, so what is the direct material? What is direct material cost? What is direct material cost, class?
4,000.
$4,000. The next one is what? What is the next one? Gab?
$10,000.
Okay, please, this call will end in 15 minutes. Kudus, when it is 5 minutes to end this call, let me know so I can create another link. Thank you. So Gab is what?
$8,000.
8,000. Then, what of the other one? Class, give me a figure now.
$12,000. I think. Wait.
No,
$12,000. 12.
This is it now. This is it. 4,000, 10,000, 8,000, and 12,000.
$12,000.
$12,000, yes.
but this is the third one now.
Sorry, under
8,000.
Gab.
10,000.
Gab is 10,000, not 8,000.
Okay, don't forget that this is an in-house cost. The one I highlighted with this color is an in-house cost. You can see it's an in-house cost. You want to compare it with what the cost of the supplier, whether you go by it or not. It is your decision. So after that,
Excuse me, sir.
direct.
So I
Gab
have to
is
change for
10,000.
Gab is 10,000, not 8,000.
I'm coming. Okay. Thank you. So direct labor. So what is the cost of direct labor?
8,000.
$8,000. So
18,000.
what do you have here?
18,000. $18,000.
Next.
$16,000.
$18,000.
Okay. The next cost
Variable.
is variable production overhead. You can abbreviate this production cost. So what do we have?
$2,000.
2,000.
Next.
6,000.
$2,000.
4,000.
$6,000.
Okay, so this is for the marginal cost, right? This is for what? The marginal cost. We don't have time. We would have added it together, then we'll go by the other one. So we'll just merge everything together since we just want to get cost. So the other cost is directly attributable fixed cost and committed costs. Can you see it? Can you see them? Please screenshot this cost as well,
Yes,
so
sir.
that we will just add the cost. Thank you. So therefore, we have attributable cost. Let me just use it this way: attributable costs. So attributable costs. Well, what is the total? There is no need for bringing them one after the other. So what is the total cost? The total cost is 50,000, right?
2,000, yes.
Okay, but we need to get for each. Okay. I get. So let's attributable cost. The first one for bag is what? 1,000, right?
$1,000, yes.
Coming. So next,
$5,000.
Next cost.
$6,000.
Next.
$6,000.
You say?
It's
$8,000.
8,000.
8,000.
1,000, 5,000, 6,000, and
8,000.
8,000.
8,000. Yes, sir.
Someone is using bedroom voice for me. Hey, yeah.
It's myself. Is it yes,
Hey,
sir?
hey. Okay, we'll continue. Committed what? Committed what? Committed
Cost.
costs.
Yes, sir.
So what is the committed cost?
$30,000.
$30,000. Oh, they just give committed cost of 30,000 naira.
$.
How should we apportion this? This format.
Why not get the total of this one, then add it together with that one?
Or can you use the fixed cost to apportion it? Total.
You can
Okay.
also use rating.
Okay, now let's do it this way. Let's do it this way. Hello. Let's do it this way. Yes. Okay. Divide it by the numbers. How many numbers is this? That is 4, right? Committed cost. Divide it by the 4 numbers.
That's
Do it like that.
5.
That is what?
$7,500.
Okay. So committed costs. The total committed cost is $30,000 divided by anything that wants to give you a headache. You just look for alternative. This one will not give me the headache. It's just the arrangement, though. It's just the arrangement. So you say 7,500, right?
Yes, sir.
Each.
Okay, yeah, per each of the products, yeah, per product. Per product. Per product. So we apportion it that way. Just divide it. 7,500. We'll do copy and paste. Coming. Please, when it is 5 minutes, we'll check. Oh, is it not 5 minutes?
3 minutes to.
3 minutes. Wow.
Yes.
No, we still have 8 minutes.
3 minutes to 5 minutes now.
How the clock is that?
3 minutes to 5 minutes.
So here I have 8 minutes. So let's quickly add up. Please add up the total cost for in-house cost. What do you have? Someone should just give me
For back is 22,000.
For the first one, $22,500.
Someone is using bedroom voice for me. Continue. Better speak.
For the first one, bag, we have
Okay.
$22,500.
$22,500. Okay, next.
$46,500.
You say?
$46,500.
42.
$46,500.
Okay.
And for
You don't know the name, Abby?
the next on the
Don't
Gabby.
We have
if you don't know, just say deep. Just say the second to the last of the week. If you don't know it. So what do you have?
Gabby is
We have 41,500.
41,500.
Then the last one, we have 51,500.
Okay. You see, now no bedroom boys. 51.
500.
Thank you. Coming. 51,500. So now you can see now, class. Can you see it? You can see which. Please mute your mic if you are not talking. Please mute your mic, please. Thank you. So you can see that if you were to produce in-house, you will incur 22,500 for bag. If you are to produce, it's 5 minutes, right? Let's make it 3 minutes.
Yes, sir. It's 5 minutes already.
Yeah, let's make it 3 minutes. So if you are to produce gap in-house, you will incur 46,500. And supplier is willing to supply it for 42,000 naira. Class, which one will you go for? Will you produce it in-house? You can see that this is what we are trying to say. The first one, you will tell the management because you want to make a decision that, oh, you should subcontract bag and gap and gap. Is that not so? Because the cost is 46,500. Now, when you look at this now, this is what 41,500. Is that not so? This is 41,500, and this is what 51,500. Even all the cost is even higher, right? All the cost is even higher, right?
Yes.
So when we come back, yeah, all the cost is. So when we come back, we'll explain it. So there's no cost savings here. Thank you. When we come back, we'll explain more better. Thank you.